Good morning, and welcome to Market Wake Up. My name's Jordan. This is John. You are watching the show to get you up to date with everything you need to know ahead of your trading day. We break down the macro mumbo jumbo. A good little pool is if you ever thought there's more to trading than just technical analysis, what's really driving the charts? Well, you found the show that talks about it. Without further ado, let's get into the Market Wake Up. Happy Friday, John. We made it. It's Friday. How you doing?
I'm doing well, mate. I'm quite glad it's Friday, to be honest. I'm not going to lie. It's been one of those weeks. It's been an absolute slog this week.
Tell me about it. Tell me about it.
Quite glad it's Friday, to be honest, mate. How about you?
Yeah. Well, I feel the same way. It's been a slow crawl to get back to the Friday, so I'm glad it's finally arrived. But yeah, no, like a good week. Obviously, we launched the promotion, so a lot of new people might be seeing Market Wake Up for the first time in a little while. If you hear anything behind me, I've got my dog wagging his tail, excited that Market Wake Up's gone live on a Friday. So apologies if you can hear that. But no, I've had a pretty good week. I've not had a chance to actually change any positions in my portfolio this week. The one thing I have been keeping an eye on are some of my equities, which are performing quite well. The ones that I didn't sell off are performing quite well, which is nice to see. And obviously, we're moving into earnings week. We're actually only about 8 or 9 days out from some of the big earnings weeks. So we're seeing that kind of pre-earnings run up in which I like to trade. But for everyone at home, how was your trading week? It's Friday. You got to the end. Did anyone look into any macro trades? Did anyone take any macro trades this week? That's what I'm interested to know. Have we converted anyone to take a trade yet based on macro analysis? If we have, I want to hear from you. Put your name in the chat. Let us know what you traded. But even if you didn't, let us know where you're tuning on from. John, yesterday was a reasonably busy day when it comes to manufacturing and services PMI across the board. We had obviously all the Euro stuff happen while we were there. Then we moved into the British, which disappointing news out of Britain, which was interesting, a little bit unexpected. And then we moved it obviously into the US, which I've never seen something almost nail forecasts, especially in PMIs. Like they're not far away from those forecasts when it came out of the US. What are you? Anything yesterday that you want to spotlight?
Obviously, interesting unemployment claims. They were down fairly decently again. So the market is definitely shifting its vision of the recession, right? We talked a lot about it as well. Still feel like there is in the back of our heads that we need to be very interested in the idea that there could be, as you know. But the problem is, and this is why what we said earlier in the week, that you can never call a market top. If you do, you're absolutely ace at it, and you should milk it for all you can.
You should go write a book.
Yeah, you're an oracle, right? If you can.
Can you name 3 oracles that have done that in the past? I can. No, or maybe not 3. Maybe, the guy that wrote Rich Dad Poor Dad. What's his name?
He called the market top.
He called one market top, and he's been calling one since. Michael Burry from the movie. What's the big movie?
I guess with Michael Burry, it did take 2 years for it to come through.
Yeah, he went massively in debt, but he called it. Since then, he's called another 17 tops, which haven't come out. But it just shows you the power of being able to milk when you do just nail one.
Yeah, well, that's true. That's true. And to be fair, I've seen some videos recently circulating about Warren Buffett's just took a large chunk of his stocks again, and everyone's thinking, "Oh God, no."
What do you mean? Like he's sold or he's bought?
No, he's sold.
Because he sold like half of Apple, half of his but that was a few weeks ago. He sold more.
Yeah, he's sold more stocks now. So that's quite interesting, considering obviously he's considered one of the greatest investors that's ever to walk planet Earth. So I'm thinking this is quite interesting dynamic, because a lot of the big players, I guess, that we would typically look at would be kind of, showing us that they're getting a little bit scared to get long, I guess, in the markets.
Yep.
So that's quite interesting to see. Obviously, that kind of ties into what I was talking about with regards to the US and the idea that the recession fears have kind of dissipated now because the data has started to become so good and so much better. Obviously, we tried to highlight this a few weeks ago in terms of GDP was really good, and that's usually a really good sign of a healthy economy and a growing economy. So them cutting rates into growth would only really, for me, tell me that would encourage more growth. So obviously the US dollar is one of those currencies that's performing pretty well at the moment. Stocks have been performing well off the back of it. I mean, the break into all-time highs has been a slow burner, hasn't it? It's not really taken it's not really taken off as we would probably expect. It's just completely kind of just hovered. And that's obviously because the US election is coming up as well. So, that's something to take into consideration. But yeah, really for me, that the data out of the US has started to become a little bit better. PMIs have been doing okay. The UK yesterday was a little bit... I haven't seen what's come out of the BRICS. I don't know if you've seen any of the BRICS.
Well, if it's not catching my eye... Yeah, if it's not catching my eye or it's not very big, then it's not worth thinking about.
Yeah, that's fair. That's fair.
Right. Look at me directly into the camera. Where's the VIX priced?
Oh. I didn't look. I went to.
Why didn't you look to the right there? That wasn't even trying to hide it.
I swear. I didn't see it. I'll close my eyes then. I'm going to say 18.8.
Straight away, where's the VIX? 19.12. 19.12 is where we're sitting at today with the VIX. A little bit of an uptick yesterday, bit of a volatile day, but the VIX ended up closing in and around where we opened. And same thing, a little bit to the downside today. You're right. The S&P 500 broken all-time highs. We are moving, but it's a sluggish move. And as we pointed out, I think it was Wednesday, maybe Tuesday, we are seeing that drop off in volume, which moves us into it. Predicted when you're going into a coin flip of an election. Let's drop down the volume because no one knows where they want to buy. Everyone just wants to take risk off. Also makes it very, very risky because it just takes one big player to be able to move this whole market. So it can cause a worrying effect. If someone like Warren Buffett comes out and says, hey, I'm selling my whole portfolio, that alone could cause a market crash. So we are moving into this kind of uneasy territory, but it'll be interesting to see what comes of it. Let's get you all up to date. A lot of red across the board today. Let's get you all up to date with where markets are priced. Let us know what you're trading today, if you are trading today, and what assets you're looking at. Very quiet in chat, guys. We are live. If you want to chat to us, chuck in a message. That's why we do this live.
Happy Friday.
Aussie dollar.
Say happy Friday.
Say happy Friday. Yeah, let us know what's going on in the chat. Aussie dollar is down 0.2%. Euro unchanged. Pound unchanged. US dollar CAD unchanged. US dollar Japanese yen unchanged. Pretty barren day out there. I've said unchanged. You probably see, Jordan, this percentage change is anything below 0.1. I'm considering unchanged. The XJO unchanged. DAX unchanged. The Nikkei unchanged. The FTSE down 0.2%. The S&P 500 just unchanged, but closer to the 0.1% to the upside pre-market. Coffee down 3%. Gold is down 0.3%. Nat gas up 0.5%. Silver down 0.7%. So we are seeing kind of those solid commodities come down a little bit. Sugar unchanged and oil up 0.16%. Bitcoin down 1.1%. Ethereum down 2.4% as well. And bonds relatively unchanged. It's another one of those boring markets, John.
It is. I mean, the only thing that really caught my eye yesterday was we saw obviously a little bit of a rebound in the euro. Euro's data was slightly better than expected. I mean, it's still pretty poor out of Germany, but any kind of positivity there, I think they're going to try and get on the back of slightly, or at least use that as an opportunity to take some profits on the moves that they've already been into. So seeing the market push higher on euro is quite interesting to me, considering as well where retail positioned at the moment on euro. So I like the idea of seeing a little bit more upside to that market, just from a point of view of I want to get in. So I want to get in that short. So I want to get in at a reasonable price. So I want to see price continue to try and drive higher there. Across the board, though, it was quite interesting in terms of we did see a little bit of a dip up, like you said, in the volatility index yesterday. Again, It kind of came a little bit lower, but yesterday we spoke about the idea that the volatility index from now on till the election does typically rise, and in that scenario, we could obviously see that impact risk assets. The S&P 500 could start to come off those highs a little bit, and I think that's where I'm kind of trying to find the narrative of a trade now when it comes to the US election. I'm trying to picture myself and say, okay, well, if we do get that rally out of the VIX, what am I expecting? I'm expecting that sort of risk off play. So maybe a little bit of bullishness in the Japanese yen in the very, very short term, which I'm going to talk about in the big bite. And then also sort of obviously the declines in the stock markets. If we do see those moves come off, maybe a bit of a downside in gold as well, which could be interesting. But I think then after the election, if we start to see the VIX start coming down, I think it'd be a good idea to be involved with those again. This could be the election could be a good sort of repositioning for many. It could be a good idea, good place for people to start getting in on these potential moves. If we do see a little bit of a sort of drop in the S&P 500 and then the VIX does start selling off again after the election, I think it's natural to look for the rebound in that market. So I'm trying to think about how I'm going to position myself into this. Obviously it's a bit of an unknown. It's a coin flip.
Do you want actually I can't say that because it's advice. Do you want to know how I am?
Yes. How are you doing it, Jordan?
Cash.
You've got the 2007 S&P chart printed into the back of your head. That's why.
Yeah, but if the 2007 S&P chart does come to fruition, realistically, the damage was 2008.
Mm-hmm.
So that does mean that if we are to correlate with that really nicely, we shouldn't see the bad things until this time next year. So we've got, maybe a few months of profit left in it.
Yeah, and that's the thing, isn't it? Like I said, you can't. It's very rare for somebody to call a market top, and I mean, I'm no oracle, right? Maybe in the future. I do like to call some market tops and bottoms, but I do all the work. The commitment of traders does all the work for me, so I can't take the credit for those. But it's just an interesting dynamic now. I am expecting to see the VIX climb. Because of the data that we've seen. It's just going to be whether how aggressive it's going to go, basically, is how I'm looking. Are we going to see that big increase, or is it just going to be minor? Because when I was having a little look at when Obama had his second term,
2016? No,
2012 would that have been?
His second term?
His second term, I think, would have been 2012, right? Because didn't Trump take over from Obama?
Yeah, was that not 20? Oh, yeah, that would have been 2016, and then 2020 would have been, that's right. Yeah.
So 2012.
2016. 2012.
Yeah, 2012.
It's Friday. It's Friday. Yeah, everyone give me a break. It's Friday.
That's when he got re-elected into his second term, basically, was in 2012, right? Now, the VIX did follow a similar kind of path, but it wasn't very aggressive. It was very mundane. It was very, so I was just trying to
remember, though. Volatility back in 2016 compared to modern day is very different. The amount of people who are involved in the market's also very different. Yeah,
and that's always changing, right? That's always going to be changing. But the problem with that is we can only draw on what's happened in the past. That's what charts exist for that reason. We can only have a little look at what's happened. What I'm trying to take from it is the fact that usually if we see a sort of very low volatility index, basically the range of it hasn't gone too far, then the condition for the trade that I want to get involved with will probably not be there. Essentially, that's what I'm trying to figure out, what kind of trade I want to take in terms of this election. But yeah, I've kind of taken over with the election talk. But yeah, other than that, obviously there was some data out of Japan, so I will talk about that a little bit in the big bite, because
let me confiscate then. IFO German business climate is happening. If you haven't heard of the IFO before, it's a survey of 9,000 businesses in Germany, just to get an understanding of what's going on. IFO stands for Information and Forschung, which is German. Obviously, in English, that means information and research. Okay, so IFO is coming out with business. Now, the reason this is getting an honorable mention, not because I want to show you how I pronounce Forschung, it's because Germany is obviously the big focus. If you weren't here yesterday, we talked about the big bite of the euro. Germany's economy is really the focus right now. For me, looking in the euro area and looking for potential growth, this survey has correlated historically so well with the German and the whole euro area economic actual conditions, which are delayed. They're lagging indicators, right? We've got to get all the information and then we print out the information once it's happened. This indicator here, the IFO business climate, is actually correlated extremely well, but it's more proactive. It's less delayed. So depending on what this comes out of, it's forecasted to come at 85.6. We're at 85.5. So actually forecasting it to get a little bit better. If it does, you might actually see a little bit of demand in the euro from that, which is one to look out for. A little bit later today, we got core retail sales and retail sales out of Canada. We've spoken a lot about Canada recently. I wonder how many people have been buying maple syrup. What was the overall? Was it 6 billion? How much money did it make? I forgot it already.
It wasn't 6 billion. I think it was like 600 million.
That's right. It was 612 million or 618 million. I remember that does. So core retail sales and retail sales are going to be produced out of Canada, plus the durable goods orders out of the US as well. But that's everything you need to know for the rest of your Friday moving into the weekend. For now, John, let's get to our favorite bit, the best bit, the big bite.
Let's get into it. So we know the yen's my favorite asset, I think. Although I would say it does hurt my soul every now and again when it comes to actually trading it.
Hurts your soul.
It does hurt the soul a little bit. I've had some bad moves on the yen in the past. I've had some really good moves on the yen in the past. I actually called the intervention back in... Oh, God, when was that now? Let me go back. It was when we were about 100 around this area in 2021. Yeah, called the intervention coming in. Well, actually, the intervention was 2020 where we had that little bit of a move up. Actually, was it?
No, that would have been COVID, yeah.
Might have been COVID. Yeah, sorry. Might have been 2016. Blow me. Have I been?
I can up you. I had the most recent intervention.
You had the most recent intervention, yeah.
And I did that on Market Wake Up. We did that right here on stream. If you go back and have a look for the stream, I called the Japanese Bank of Japan intervention. And I didn't just call it like so many other gurus. I made money on it too.
You did. You absolutely did. And that's only because I got long. So that's my But yeah, basically, again, I'm trying to think about risk, right? I'm trying to think about how the market's going to correlate with this risk. Obviously, with my thoughts with the VIX right now, I like to look at ideas where, okay, if the market is going to go a little bit more risk off, where's the market going to go and target? Japanese yen is obviously one of those where it has been a market that has always been seen as the safe haven asset. So again, just trying to put the puzzle pieces together that if we are going to see the VIX, and this is very if but and maybes at the moment, but if we do see that VIX rally, I do want to be looking at maybe some short-term strength in the Japanese yen. And I say short-term because I think long-term outlook, we've got to be very careful of what's going on in the yen. Obviously, you did some analysis earlier in the week, which highlighted this really well. But also we had this little report come out of Reuters that I was having a little look at earlier. And it was BOJ may offer less dovish signs as US recession fears ease. And that's, again, kind of bringing it back to the plate of risk, right? When you start to see the markets go a little bit more risk on, they will go and sell things like the Japanese yen. Again, a lot of talk about the carry trade starting to reappear, and we've kind of discussed that a little bit as well, whether it will be a strong carry trade or not. But what was quite interesting today, or what I saw come out today, obviously we were talking about this little BOJ move here. Tokyo Core CPI year on year came in, and it came in at 1.8%, down from 2%. That's only going to fuel that little bit of weakness in the yen right now, because BOJ will now not look at this and go, yeah, we're going to go and hike interest rates. You know, they've been very tentative to do it in the past, and the last time they did it, core CPI in Japan was a lot higher, right? You can open this chart up and have a little look at it yourselves of where it's been in the past. You know, we were up towards the 4.1s, even down into the 3s, you know, 2.7s. So 1.8 is okay. It's a lot higher than what it has been, you know, over sort of an average in the past, but still, I still feel like anything below 2% is okay for a central bank. So they're not going to rush to go and hike interest rates. And that's where we would usually look at an opportunity on the sort of long-term grand scheme of things. So I'm looking at this thinking there's a situation in the US right now where they could go into higher inflation, especially if Trump comes in. What does higher inflation typically bring? It can typically bring higher interest rates. We've looked at the bond yields in the US. They've been going up as well. So there's a lot of opportunity for the Fed to actually not do much, right? If anything, from now on. So this market, to me, I think is actually one that we could look to go long on, right? But I just want to bring your attention to the idea that the risk is where I'm looking at. And the risk right now, I feel, if it does rise, can present us with a little opportunity in both ways. Because I think if we do get the risk, it could bring dollar yen into an interesting price for us to get long, right? So the first thing I was looking at, we had a commitment to trade a long signal back on Friday the 13th of September.
Ooh,
interesting to see that on the Friday the 13th as well. It was in at these 140 lows, 137 lows as well. Market has since rebounded, hasn't really looked back. We had a very small correction, but we haven't really seen any kind of correction since. The market has just completely taken off, and that's where I think the opportunity could lie for us. We're coming up into a little bit of an area of resistance for me, anywhere between kind of 153s and above. I've kind of narrowed it down to the 154. But 154 would be an area I'm looking for the market to try and spike into, potentially reject, but give us a better price to get on the overall move back up towards those 160s, because of how the two central banks will probably be moving against each other again, right? If the BOJ start to do nothing because the data is, not necessarily giving them the opportunity to hike interest rates. We've just had a new PM come in who was hawkish, but then as soon as he got in, changed dovish. so obviously the situation there is quite interesting. Politics. Politics getting involved. And again, the central bank is not necessarily meant to be involved with the politics, but we know it always is. And with the idea that inflation could be coming back, when we take a look at those yields, when we were looking at it yesterday, or not yesterday, it might have been a few days ago, US 2-year yields at the moment still trading back above 50 moving average now into that 4% zone. So again, this is starting to give a little bit more of an uptick now. And the feeling around the US markets is that we're starting to see a little bit of an increase. If you look at the 10-year yields as well, 30-year yields, they're still rising. And I got a feeling that if we do see that Trump trade essentially come in, I think yields will be higher in the US, which is going to drive investment into the US dollar. And the yen could be one to be burnt by that. One interesting currency that is outperforming the yen as well is the Swiss franc, right? Swiss franc came into the 166s, rallied, and is really outperforming the Japanese yen at the minute, which I find quite interesting. Now, I rarely play Swiss yen because I see them both as sort of safe havening assets. But I wonder if the Swiss franc is outperforming the Japanese yen here because of the fact that the euro is not doing so well. And this is where the market has gone to, right? So the euro is not doing well. They've gone into the European safe haven being the Swiss franc, and they're driving the Swiss franc higher. But Swiss yen moving higher is quite interesting. I think this could be an idea to have a little look at going forward as well. If we do start to see some rejections in at these levels here and a bit of a pullback, then I like the idea of being long Swiss yen in the short term. You know what my feelings are around the euro anyway. So this could just be a way of exposing myself slightly to that. They might not be directly correlated.
Concerned at all about an intervention from Swiss National Bank?
No. I mean, that was my concern. But the weakness has started to come in across other assets, right? If you look at the Swiss index, that has come off those highs. I think if you start to see the Swiss do really regain that strength, then yes, I think we would see some kind of intervention, because then they're going to have to continue to aggressively cut, and they're running out of room to do so, right? Yeah. But as long as the Swiss rates in terms of the Swiss E index comes down a little bit, I think they'll be happy with that. So, and again, we're talking about cross pairs here, so you've always got two sides to the coin, so to say. But yeah, I think the yen's just an interesting dynamic for me at the moment, and what I'm trying to do is vision where, if the risk comes in towards the event of the election, where it's going to come in, and how I can position myself. More importantly, I feel after it, okay, because I think you can get caught up in the election trade. And I mean, I remember when Trump first came in, because I was actually sitting on my laptop in my living room, gold chart open, and I was like, I'm going to make money off of this. And I got absolutely walloped because I decided to go long on gold because I thought Trump coming in is bad news, and people will rush to gold, right? Not knowing what I know now, that was a stupid idea. But I think that's where a lot of people could go wrong. You could try and you hear a lot about the fear, right? But we've proven this week, when you look at the VIX, actually it does decline after the election. So that to me is something I want to try and
people adapt. Investors adapt very quickly. Risk on events don't last very long. People adapt very, very, very quickly. And you see that through the elections. People think, oh boy, this is not good. Give it 4 days. And they go, well, this is a situation. This is where we think we're going to make money. There's no markets are full of emotion, yet looking back at them, there's no emotion. It's just sentiment. It's just, we think if then, so we put money here and that's what the chart's going to show.
Yeah, exactly. Oh. So yeah, for me, I like the idea of selling yen, but it's when that happens. I think I want to try and sell it maybe after the election, and I like it basically against the Swiss franc. I like it against the US dollar.
I like it. I've written down, do opposite, buy yen.
Thanks, Jordan. Thank you. Hey, I've called some great things this year.
It's only because every time we've gone opposite on the yen, it's worked. But yeah, no, I do see it. Look, CPI is not a great picture. I like it. I like your analysis all over there. I don't know if I would take it, just personal risk appetite. But I like the idea in particular with US dollar, Japanese yen, with the flip potential. The potential of if then go this way, if then go this way. It keeps you neutral, and it removes a bias as well. But no, all in all, I like it.
Thank you very much.
You want to take it to go?
I want to take it to go, yeah, sure.
You want to take it to go? I'm gonna come in your neck of the woods for this take it to go. I like doing equities for a take it to go. I really do. I like moving into equities for take it to go, because I think when we do a currency or a commodity, like, it's better for a big bite because we can dive really into it, right? But when we just go to a take it to go, it's kind of like, oh, let me show you. We're going to Berkeley Group. Have you heard of Berkeley Group before?
I have not.
They are listed on the London Stock Exchange. They're a developer, right? Ooh. Right now, not doing too well. Why? Because the cost of living and people aren't buying and all that fun stuff. We are forecasted to come out of that. Middle class and upper class, they're always going to buy. They're always going to keep building. They're always going to keep developing. We're sitting in and around at this 4,600 level. And what I want to do is take it long. And the reason I want to take it long let me awkwardly just quickly change screens, is because, ladies and gentlemen, brought to you by Seasonac.
Drum roll, please.
Seasonal play. There's a great one at that. Look at this: 31 years, 80% win rate, 10.6% average return, 24 gains, 6 losses, average loss of about 9%, average gain of about 16.5%. There's your risk management. Having a look at this. Always talk about recentness, right? I make up words for this, but the recentness is so important. Have a look at that. Over the past 10 years, only 1 year has failed. Actually, we can go further, all the way back to 2010. Only 2018 did we see downside, and it was minuscule. Everything other than that, look at this run up into Christmas. Christmas come early, kids. 10.6% average return, 80% win rate. There's your take it to go. The Berkeley Group holding code is BKG, listed on the LSE, the London Stock Exchange. Love you and leave you for another weekend, guys. Get away from the charts this weekend. Reset. Come back on Monday, 8:30 a.m. British Standard Time. You know where to find us. Make sure you like, comment, and subscribe. John, have a great weekend, mate.
And you, mate.